ISDA agreements formats. This one is master agreements, which provides terms, conditions, definitions, all that information, you can read it here. For any type of swap contracts, you can refer their framework and you can sign the contract. All right. So here basically you would see terms, right? Centralized terms. So you can read that terms, send it to the counterparts. Counterparty also they can read terms from their end. They can sign, and you both counterparts you can execute it. So this is how frameworks actually works at ground level. So this is just an agreement format so that you can refer it. So here you can, if you sign agreement, then you can reduce risk. If you don't have a agreement in place, then how will you reduce the risk? You won't be able to do it. If you have, let's say, defined terms and conditions, if you have signed agreement or paper with you, then you can easily reduce risk from any contracts. Any contracts, it means any contracts. Even let's say if I talk about counterparty, let's assume it, take one condition to understand this. You have signed contracts with, let's say, B. When you sign contracts here, there was no liability basically, but at the time of, let's say, settlement, so the liability has been detected or created. It's a liability of 1 crore. So when you try to settle the contracts, then you got to know there is a liability of 1 crore. And let's say the B is here, the payer of this liability, and A is receiver of this liability. But at the time of settlement, let's say this B is denying to pay 1 crore. Just imagine you don't have an agreement in place. So how will you fight with B as a? You are at a, let's say, A side, then how will you fight with B to claim your benefit, economic benefit? You can't even go to the court and ask for a justice. You can't do this. The reason is you don't have a preventive measures of charter or agreement, I would say, which can define that you are receiver, you will receive economic benefits, you can claim, you are allowed to do this. You don't have that framework in place. And that's how, if you see this ISDA agreement framework, which allow counterparties to reduce risk, because if you sign, paper, and if you can carry that with you, then you can easily reduce that risk. So this is how your ISDA framework, which help you to prevent, risk or reduce risk, I would say, from the contracts. And apart from this, if I talk about corrective measures, so you can take corrective measures on time to time. If it is required, any regulatory, let's say, any change, if you see your regulator want any additional implementation or addition, so regulator can do this. Regulator can implement this. So that same thing you can include in ISDA framework, because it's just a framework, guys. When we talk about ISDA is an institution which provide documentation or framework around swaps or contracts. So that same framework, as a counterparty, you can refer it before initiating any swaps related trades in the market. If I talk about options and futures, we don't have any physical documentation required for options and futures, but we have smart contract process with futures and options. So it means stock exchange or clearing agent maintain that smart contracts, signed it digitally, and execute or settle the contracts. But in case of OTC, biggest swaps, it comes under OTC market. If you don't have a framework, then counterparty can take undue advantage of your contractor business. That's why it is required, right? And any changes, if you see any changes, if it is required, or let's say time to time, if you see any that upgradation in the system, means that documentation process, it is allowed. So you can take a corrective measures as well. So this is how ISDA basically provide frameworks or ground for buyers, sellers, or counterparties or participants who want to deal in swaps contracts basically, right? And apart from this, how it is so signed and all. See, this particular contract, if you sign, let's say buyer and seller, if they sign this particular, let's assume it, buyer and seller both are interested and they have signed, seller, buyer, they have signed contracts for crude oil. So it's some revenue from crude oil which was signed. This both the parties which are agreed, they have decided to sign this is ISDA. This agreement it should sign from both the counterparts. Signed it means acknowledged. If you let's say orally talk and if you don't execute documentation, that oral commitment has no value. If any counterparty denies obligation, performing or honoring obligations on settlement date, then you can't, knock the door of court against that counterparts. You can't do anything to avoid that conflict. That's why the ISDA organization has designed framework around the swaps. If you have signed contracts, so contracts should be signed fully, so that if you appoint any trustee, so trustee or broker that they can monitor it. So both the counterparts should sign this particular framework. Once before signing, you can take care of all negotiation part, so that after signing, you don't need to modify your agreement. Even if you have any means, let's say room for modifications of negotiations, you can do it. Before signing it, all that negotiations or whatever things that you want to discuss with counterparts, so it should done it basically before signing that particular contracts. All right. Terms and condition it should define the execution or settlement process. See, in this particular agreement, main points which are important is reset period. Reset it means settlement, price, quantity, terms, collateral name. Collateral it means assets. We'll discuss that collateral in next session. Then duration, agent, CPT name, fees, charges. You would see all of that information. It is required, and it should sign and verified by both the counterparts as well. Right. So how you can, let's say, means verified. See, same information we perform as a reconciliations as well. Right? Reconciliations, it means, let's take one example for how this happened and how you can link it. Whenever you sign any swap contracts, let's take the example of interest rate swaps. Let's say we have a notional amount. Notional amount, it means basically principal amount. Let's say principal amount is 1 lakh. is paying 10% interest payment, and B is paying, let's say, 12% interest payment. Right. So both counterparts which are paying, basically which are paying means 10% and 12%. Notional amount is, it means you can consider that amount as a base amount. Let's say it's a loan amount. So both counterparties has a loan of, you know, 1 lakh. And now this A is paying, let's say, floating interest payment, and B is paying fixed one. See, both counterparts, they will have their own prediction research. They'll perform it accordingly. It is part of their due diligence. They'll perform it. And after that, let's say B is interested in floating interest and A is interested in fixed interest. So here, what they can do, they can execute the contract. Let's say this contract is signed for 1 year, 3 year. Here are the counterparts. So what they can do? See, first understand it, cash flow from this particular transaction. Cash flow, it means if I calculate interest payment for per annum on 1 lakh, let's say, rupees, at 10% interest payment, it would be around 10,000 for per annum. Same if I calculate as per this 12% interest payment, it would be around 12,000. So in the chart, how you can chart it up? Floating interest payment. Floating interest payment is 10,000. Floating, it means it will be changes on time to time. And if I talk about fixed one, which is 12,000. Fixed, it means which is fixed. It will not change it. Even if RBI or central government's body, if they change any interest rate, this interest payment, it will not change it. It will continue until that contract expires. All right. So, but here in this particular case, at the end of the year, if you see, if we talk about cash flow, so net cash flow, it will be generated only, which is 2,000. All right, and this 2,000, so counterparties will exchange it. So this, let's say, if I talk about the person who is paying floating was paying, let's say, 10%. Fixed was paying 12%. But after the exchange of cash flows, this person was expecting this amount. Right? And this, let's say, A and B. He was expecting around 10,000 and he was expecting 12. So basically, we will pay 2,000 to A. So A will receive it 2,000 from this particular swap contract, and all these terms that you can check it on ISDA framework. All right, but in terms of accounting system, see, every quarter you would see cash flow of 2,000 which will be generated from this particular contracts. Every year, I would say, quarter. Depends on the even market interest rate as well. Right, we are assuming it every quarter will have same sort of interest payment, so that you can calculate the cash flow. This 2,000 will treat as a cash flow from the contract. So this cash flow, you can exchange it with the counterparts. But from a reconciliation perspective, how it happens? Floating interest payment, Floating interest payment we denote in swap, let's say 1, 2, 3, 4. Swap variable, right? Fixed interest payment we denote in swap 1 to 5, which is fixed. So F and V both are now legs. So a variable, if I talk about the amount we have is 10,000 and fixed amount which we have is 12,000. Difference of this one will receive as a coupon, trade fee, or event fee. And this will be 1,000. So this 10 plus 2, it will tie with 12,000. This is how recon works at ground level. Means if you join any fund accounting or investment banks or brokers, you will have to perform recon like this. Recon process with swaps. So you will have swaps in place. So you will have to recognize the tax information. So this is what netting, will receive net difference, nettings, the notional amount, terms, and details of counterparties, cash payment, collateral information, right? All of that information, it comes under recon. So you will have to perform recon and verify and find out the differences as well. This was just plain example, but you might see complex as well. See, logic remains same. Even if you change company or system, logic remains same. If you work for US market, China market, Hong Kong, or any other market, that never changed. Base never changed. But same logic that you can apply it whenever or wherever you work, and you can try to resolve all your doubts as well. And apart from this all information, it would be included on or defined or prescribed on ISDA. ISDA means International Swaps and Derivatives Framework, right? So that all master agreement define standard terms, means your this terms, it means settlement, cash flow, and everything that comes in the standard terms. Apart from that, master agreements also defines about credit support of counterparties, right? And then also confirmation, then definition and credit supported agreements of counterparties. So that defines it. All right. So any other guys questions? If you have, just let me know. This all comes under the confirmation of your contracts. So it means whatever process that we have discussed, this comes under your ISDA frameworks contracts or confirmation contracts. So both counterparties, they confirm to each other and they'll process it out. Right. So collateral, it means asset information is also required. Asset, it means whenever you sign any swaps, we always see in a derivatives, always we consider something which is underlying, right? And on the basis of that, we sign contracts. So that information is required. Credit support information, basically. Collateral information, it means asset. In collateral session, I'll explain that collateral, it means what exactly. So in next week, we will be covering that portion. Right. And then again, offsetting amount, it means this amount. This is basically cash flow. Even if you sometime, you would see question around it like, what is the valuation of this particular swap? See, valuation of the swap, it means not 12,000. The valuation of the swap is 2,000. Why? Because swaps that we always settle in a net differences. Whatever net differences, you can settle that swaps. We have also discussed this portion in derivatives as well, right? When we had a discussion on derivatives, we have discussed that. But apart from this, here basically that swaps part, we have a framework of ISDA, and that ISDA defined terms of net settlement of contracts. How you can settle the contracts in net. Net it means in differences. So now you tell me if this counterparty, let's say A transferred, uh, let's say 10,000 to B transferred 12,000 to A, and then again, if you see the net, if the transfer means entire amount to each other, so that will lead to the unnecessary other transaction expenses. So nobody follow this. They actually try to settle the contracts in net amounts. All right. So this was all about your ISDA framework or ISDA structure. So from an interview perspective, also just note it down. What are the important things that you need to go over again? You can go through this recorded session also. So from an interview perspective, you may expect questions around how we perform recon of swaps, recon of swaps. So you can explain with this example. So it means B leg, F leg, right? This all comes under your recon. You can explain through this process. So it means this example you can provide to them. Right? They will convince it. Recon of swaps. Second is full form of ISDA. How ISDA works, or framework, or how this or why this framework is also important. You may expect a question around it. Apart from that, so read about notional amounts, read reset, other technical terms, because after this course, if you let's say add certification details and all, anyone will ask questions around it. Do you know swaps? Do you know swaps types? Do you know how ISDA help counterparties to standardize in terms of contracts and all. So they'll ask questions around it, because I'm working as a manager with firm. So I also follow the same practice. If someone, let's say, updated that person, student, let's say, completed certification from this and that institute, then we ask questions, lots of questions around it. Can you tell me how swaps works? Can you tell me what is the importance of ISDA framework? Can you tell me how reset works? Reset, it means this process. So every year contracts will reset and cash flows will exchange. All right. This party will pay to this party will pay to this party. So this framework, we'll call it as a reset process, basically. Reset, it means settlement of the contracts. You would see questions around this. So again, I would request you go through this session so that you can understand this ISDA frameworks in details, and you can also crack the interview. If you are not, let's say, looking for any interview, then the same framework will help you to prepare for, means to resolve your doubts as well in your process, whatever doubts that you have. If you are facing any issues with swaps, if you're not able to resolve any breaks, then check the ISDA agreement, master agreements. That master agreements will help you to resolve the breaks, because that master agreement will provide you all the required details to understand that breaks and everything. Right. So yeah, I'm done with this ISD module. So I'll take a pause here. You have 13 minutes. I would now allow you guys to ask questions if you have any questions around it. So you can ask questions. I'll leave that on you guys. I'm done with today's session, whatever that, because we have covered 2 modules in this session. So I don't want to overburden you guys by completing back-to-back modules. So 2 modules which are enough. So just let me know if you have any questions. But yeah, I'm done. I'm done for today. Let me just save it if I can.